Hey guys, it's Willie from Suerte So today I want to talk about tax efficient trading. So this idea came from when I'm preparing my Q1 2021 estimated taxes. It's a bit of a chore because you have to kind of download your P&L for the quarter. And here's some kind of like some takeaways that I want to share with you. Whenever possible, try to hold your stocks or options, if you're long options, for a year or more. So this way you can get like the beneficial lower capital, long-term capital rates. So I guess at the time of this recording, depending on your tax bracket, it's either 0, 15, or 20%, which is a lot better, I think, than what your ordinary income rates are. So, for example, I think this year I might be like in one of the higher tax brackets. But of course, like a lot can change until like the rest of the year. So fingers crossed, if I continue my rate for the year, I could be in the top tax brackets, which is like 30% or more. And then if you live in a high tax state, then that's like it kind of defeats the purpose of trading, especially if you're actually doing well. So you want to do okay, but not like it's kind of weird. Like you want to do well, but not like too great, because then like there's like a point of diminishing returns, I feel. So and it's a little tricky for people that also like I also sell shorter term options, so there's no way to really get around that, because there are some stocks I feel like I want to hold for a longer term, but I want to have like a good like cost basis. That's why I sell shorter term, like 45 days or less puts, and then I try to buy them back at like 21 days. Unfortunately, that's probably one of the only bad things I can think about, like the Wheel of Fortune strategy, or the Tasty Trade options methodology, where unfortunately it's just like short-term capital gains rates, which are taxable up to your ordinary income level. So like if you're a high income earner as well, and then you do trading on the side, it's like it's so painful. Like I think that's why a lot of people, like they were considering just like moving outright to like no tax states, or even like outside the country, where there's like better tax rates. But that might be a little too much for some people, because then like they want to stay close to the family or their friends. So like but I mean, it's just something for your own personal consideration and research. I'll leave that to you. And then I guess like the other thing that you could do, like once you are assigned on a short put, try to keep like that stock. Hopefully it's a dividend paying stock for as long as you can. That is the same thing. I believe the tax rates on qualified dividends are a little bit better. I'll leave a link in the description so you can kind of read more about it. Like I guess like basically the rule of thumb is like the longer you hold it, the more beneficial it is to you, especially if it's like a dividend stock that you want to hold for the long term anyway. Like it's also it's like a good bonus, like where you're getting like more steadier income, and then also like your tax lower. So at the end of the day, it's all about what you can keep out of your earnings. So, and then for if you're long options, try to buy calls that are like 1 year out or more. Again, this way you kind of force yourself to like be more careful with the stocks that you're researching, and that It's not just like some hot stock tip from like some random YouTuber or like some guy on the internet or Twitter or whatever. And like the more research that you do, like the more conviction that you could have in terms of like the quality of like the stocks that you're buying. Because sometimes like in bull markets, like since everything's going up, like it's hard to tell which is like have like a more durable advantage in the future. So I think that's it for now. If you want me to cover more of this, so just let me know in the comments. And then another thing that I guess like one last thing, I think for some people, if you have a big enough account, probably like 6 figures or more, you can consider us doing options on futures. Again, if you have a big enough account, and then also for index options, they also qualify for what they call like 60/40 tax treatment, and these are on like 1256 regulated contracts. So basically, I believe it's 60% of your long term, whatever trades that you have will be considered long term, and then 40% will be considered short term. So I'll also leave a link in the description so you can read more about it. Again, I'm not a financial or tax advisor. I'm just sharing ideas that I'm going through as I prepare my own like taxes, and hopefully some of this information will help you out. So thank you for watching. Have a great one, and hopefully 2021 will also be a good profitable year for you as well. So thank you for watching. Please like and subscribe, and I'll see you in the next one. Bye now.